Hi everyone, welcome to another video. The market is still undecided over what direction it wants to take. Big swings up and down are still seen every week, what gives opportunity for long-term investors. I've increased my position this week in Alphabet and MGM Resorts, taking advantage of unreasonable stock price drops. My portfolio is down a lot, but my companies are still performing well. Fundamentally, nothing has changed, so I have been buying my companies at a cheaper price. Today, we will do an updated analysis on the company Himax Technologies. Since last video, some things have changed. The stock has been dropping lately together with the rest of the market. Not many stocks are getting spared from the current sell-off. I first bought Himax around November and wanted to start building out a position. At the time, the stock caught a lot of momentum and kept going higher till a point where I saw no more reason to hold my position. Since the profits that companies can earn are finite, the price that investors should be willing to pay for stocks must also be finite. Since December, the stock came back down to a normal valuation, and yet again, I started building out a position. Himax climbed this year into the global top 10 integrated circuitry design companies based on revenue, with a revenue increase that outpaced the others on the list. If you are doubtful Himax is a quality company, now's the time you should reassess. Recently, Himax gained a pretty big tailwind which could lead to another short-term stock price increase. On the 12th of May, Himax announced they will pay a cash dividend of $1.25 per share. This is equivalent to a 13% dividend yield at the current market price. The dividend will be payable on the 12th of July to all shareholders record as of the 30th of June. This is a nice reward for shareholders to get this amount of value. But there is more. This dividend can cause a big rally towards the ex-dividend date. Investors that are currently shorting Himax with borrowed shares are not entitled to the dividends. Short sellers owe any dividend payments to the share lenders. Currently, there is 18% short interest on Himax. To cover all the short positions, it would take almost 12 days. The probability of shorts covering is very likely and can already be started. Expect to see some positive momentum in the following weeks. The last quarterly results declined sequentially, but increased enormously year over year. Revenue grew 33% and net income grew around 73%. Given the fact that the Q1 results are always weaker than Q4, we can conclude this was a pretty good quarter. Unfortunately, the COVID lockdowns in China impacted the supply chain and consumer electronics demand. In response, panel makers are reducing their IC inventories, causing softening in demand for Himax in Q2. Himax expects Q2 sales to be the low point of this year, but they remain upbeat about their top line for 2022 due to clear visibility in the automotive business and two new revenue streams, including AMOLED drivers and ultra-low power AI sensing. After an amazing year, Himax balance sheet has grown very healthy. The company has a lot of cash on hand and can pay all their short-term bills. The year-over-year increase in inventory is not unreasonable, since customers were chasing Himax for chips last year, leaving no finished goods in the inventory. Looking at the valuation of Himax, you can see it is currently pretty cheap. The company is trading at only 3 times earnings, 1 times sales, 1.6 times book value, and 4 times free cash flow. Compared to the sector median, the valuation looks silly. Himax does not seem to be respected yet as a quality semiconductor company, and will need to prove themselves once the chip shortage fades away. There are currently 2 risks for Himax business. One is a decrease in gross margins, and the second one is a slowdown in innovation and falling behind against the competition. Gross margins have been going up last year due to the chip shortage. A lot of investors fear the margins will normalize soon, which will lead to a decrease in profits for Himax. But it is also important to see that Himax products mix is heavily changing each quarter. Himax has gained 40% global market share in driver IC for automotive displays. Himax expects e-paper display sales to increase 300% year over year. And if that was not yet enough, Himax is also gaining momentum in AMOLED drivers and AI sensing. All of these benefit from higher gross margins and will keep the overall gross margins higher even if other parts of the business will get a normalization. Another impressive move by the management team has been the decrease of the dividend payout ratio. They acknowledge the macroeconomic uncertainty and want to deliver sustainable long-term growth. I hope they will keep their payout ratio lower than 50% for the next years so they can keep up with competitors. Although I would have liked to see some more buybacks at the current valuation. Since the stock has been dropping, I've been able to build out a decent position in the company. If the stock stays at these levels, it is almost a no-brainer with the yearly dividend of 13%. Earnings for 2022 are forecasted to be similar to this year's earnings. This means you can expect another 13% dividend next year if the payout ratio stays the same. Himax has a good position to keep gross margins higher for now. Even a drop in gross margins should not really matter at the current valuations. This was everything for today. Thanks for watching. Subscribe and smash the like button if you enjoyed the video. If you have any questions, leave them down below in the comment section or send me an email. Below the video you can find a link to Bug0 where you can get a free share when you top up your account. Take care and see you in the next video.